Hello traders, hope you're doing well. I would like to start this video by asking you some basic questions related to options. Now, do you have a clear idea about who is an option buyer? Who is an option seller? What is call option? What is put option? Do you know the advantage and disadvantage of option buying and option selling? If you do not have clarity on any of these questions, then I highly recommend you watch this video without skipping, because it's very important for you to understand these basic topics before you start trading in options. In this video, I will try to explain all of these topics as simple as possible so that it will be very easy for you to understand. Now, without further delay, let us get into today's topic. Traders, in option trading, there are two parties. One is an option buyer and the other one is option seller. An option buyer has two choices. He can buy a call option if his view is bullish about the market, or he can buy a put option if his view is bearish about the market. If you see here, Tata Motors is currently trading close to 500 rupees. Now, if I feel that Tata Motors price will move above this level, at that time, I will go and buy a call option of Tata Motors. Now, if I feel Tata Motors will not sustain this level, which means I think the price will go down in few days, at that time, I will buy a put option of Tata Motors. Okay? So, an option buyer has to buy a call option if he feels the price will go up, and he has to buy a put option if he feels the stock price will fall. Now traders, I hope you understood this. Now, just like option buyer, an option seller also has two choices. He can sell a call option if his view is bearish about the market, or he can sell a put option if his view is bullish about the market. Now traders, I suggest you to take a screenshot of this image and save it so that you can use it for future reference. Alright? Now I have a question for you. Now tell me, if an option seller thinks Tata Motors price will fall from this level, what should he do? He should sell a call option or he should sell a put option? He should sell a call option because he is thinking the stock price will fall. That means he is bearish. At that time, he will sell a call option. Same way, if an option seller thinks Tata Motor price will go above this level, he should sell a put option. Okay? Traders, by now I believe you have understood at what time an option buyer buys a call option or put option, and you are also aware when an option seller sells a call option or a put option. Correct? Traders, what I'm going to tell you now is very important. So please pay complete focus and attention. Now, the first thing I want you to understand is buying a call option and selling a put option both is not one and the same. There is a huge difference between the two. Let me take Tata Motors as an example and explain this to you. Traders, what you're seeing right now is the option chain data of Tata Motors with the expiry date of 25th November. That is last Thursday of the month is the expiry. If you see here, the current trading price of Tata Motors is 511 rupees. Now exactly at the strike price, I cannot trade in Tata Motors. Then at what level can I trade? Now for that, I have to choose a strike price. Now at the strike price section, which strike price is closest to 511? If I scroll down, 510 strike price is the closest strike price to the Tata Motors current market price, right? Now, let me open Tata Motors chart. Now, in this chart, if I search for Tata Motors, what is the strike price? 510. When I enter this, I get different options. What we are trying to do right now, we are trying to understand the difference between buying a call option and selling a put option. So when my view is bullish, I think Tata Motors will go up, I buy a call option. If I want to buy a call option of Tata Motors and my view is bullish, I need to have 61,000 rupees in my trading account. Okay, now instead of buying a call option, let me cancel this. Let's search for Tata Motors again. 510. This is PE. PE means put option. If I want to sell a put option of Tata Motors, how much margin is it asking me? It is telling me that I have to have 4,37,000 in my demat account. So for buying a call option, it was 61,000, but for selling a put option, I need to have 4,37,000 in my demat account, or else I cannot sell a put option of Tata Motors. Now traders tell me, how many retail traders will have 4,37,000 in the demat account? A lot of retail traders will have just 50,000 to 1 lakh rupees as an average in the demat account. Now if the broker is asking you 4,37,000, a lot of retail traders will not have so much capital in their demat account, so they prefer option buying compared to option selling. So this is the first difference between option buyer and option seller. An option buyer requires very less capital compared to an option seller. Alright, now traders, instead of Tata Motors, let us take Nifty as an example to understand the second difference between an option buyer and an option seller. If you see here, Nifty is currently trading at 18,017, right? Now let's say my view about Nifty is bearish. That means from this level, I think Nifty will go down. Now, if I am an option buyer, when my view about Nifty is bearish, I should buy a put option. And if I am an option seller, I have to sell a call option. Now exactly at this level, I cannot sell Nifty. So what will I do? Let's go to option chain. So this is the option chain data of Nifty. I'm shooting this video on 10th November. Tomorrow is expiry day. Now instead of this week expiry, let me choose 18th November expiry. That is next week expiry. Nifty and Bank Nifty will have weekly expiry. Stocks will have monthly expiry. Okay, so I'm choosing 18th November as an expiry. If Nifty is trading at 18,017, 18,000 is the closest strike price to Nifty's current price. Now let me open the trade terminal, and here if I search for Nifty 18,000, here it says Nifty 11th, that means 11th expiry. We are not choosing that, right? We are choosing Nifty 18th expiry. So 18th expiry, what should I do? I should buy a put option if I'm an option buyer. So when I click on buy, if I just have 7,200 rupees, I can buy a put option of Nifty when my view about Nifty is bearish. Okay, so option buyer can trade with less capital. Now, second important thing about option buying is the maximum risk that you will have in a trade is this amount itself. Now, what do I mean by this is, my view is Nifty will go down, right? Instead of going down, if Nifty goes up, it goes up to 20,000. How much ever high Nifty goes, the maximum loss I will have is just 7,200 rupees. More than this, I cannot lose. So option buyer, for them, risk is limited. But if I am an option seller, what will happen? Let us see. Again, let me search for Nifty 18,000, 18th expiry, call option. I have to sell if I am an option seller. If I click on selling a call option, the margin that I need is 1,04,000 rupees just to trade with one lot of Nifty. So here also the capital required to trade in Nifty is comparatively more in option selling than option buying. And also for an option seller, the risk can be unlimited. That means an option seller can lose this entire 1,05,000. If the view goes against him, he can lose even more than this. Theoretically speaking, the risk for option seller is unlimited, but for an option buyer, the risk is limited. For Nifty 7,000 rupees, I said no. That is the maximum risk for option buyer, but for an option seller, he can lose this amount or he can lose more than this also. But most of the time, what will happen is, in this case, my view is bearish. That means I think Nifty will go down. Now, if Nifty keeps going up to 80% of this 1 lakh, let's say up to 80,000, your broker will keep quiet. They will ask you to add more funds to your account. If you don't add the funds, right, when it reaches close to this price, they will auto square off your position. You can lose this entire 1 lakh premium which you paid. So that is an disadvantage when you're trading with option selling. Alright, so this is the second difference between an option buyer and option seller. For option buyer, the risk is limited. For option seller, risk can be unlimited. Now, apart from this, there is one more difference between option buyer and option seller. Let's see that as well. Again, let me take this Nifty only as an example. Nifty current trading level is 18,000. Right? Let me mark this level. Now let's say my view about Nifty is bullish. I am thinking Nifty will go up to 18,500. I'll mark this level. So I entered here and I am expecting Nifty to go up to 18,500. Now let's say Nifty went like this and it reached this level. Here I'll already be in profit. From 18,500, let's say it went to 19,000 level like this. I will be in more profit. Now let's say again Nifty went up to 19,600. Again market will go up and I will be in profit. So as long as the market keep going up, I will keep making profit. So theoretically speaking, for an option buyer, profit can be unlimited. If Nifty goes to 20,000 also, I'll be making huge profit. Now instead of being an option buyer, let's say I decided to be an option seller, and here also my view is bullish about the market. That means I think Nifty is going up. Now for an option seller, the profit is limited. For example, this 18,000 strike price which I said no, let me go to option chain. If I am an option seller and my view is bullish, what should I do? I should sell a put option. So put option side, if I scroll down, this 18,000 strike price, at what amount it's trading? It is trading at 143 rupees, right? So when I sell a put option, I will get this 143 rupees. So 143 rupees into what is Nifty lot size? 50, right? It is 7,500 rupees. Now, if my view is correct, the maximum profit I can make in option selling is this amount, 7,150. Now let's say I sold a put option at 18,000. My goal is I want the market to stay above this 18,000 level. So if market goes above here, I'll make only 7,100. Even if it goes here, same 7,100. It doesn't matter how much high Nifty goes. My view is bullish and my profit is fixed. Even if my view is correct, market how much ever high it goes, my profit is already fixed. Okay, now instead of going up, if Nifty rapidly it goes down, then I will be in unlimited loss. Okay, so now in total we have discussed three important difference between an option buyer and option seller. The first difference, for an option buyer, the capital required to trade is less. If you want to do option selling, the capital required is more. Second difference, for an option buyer, the risk is limited. But for option seller, the risk can be unlimited. Third point, for option buyer, the profit can be unlimited. But for an option seller, profit is limited, a fixed amount. Now traders, these are the three main difference between an option buyer and option seller. Now apart from this, there are other differences also, but I cannot cover everything in one video, right? Now if you see here, it looks like being an option buyer has so much advantage compared to being an option seller, right? But traders, do you know, big financial institution, high net worth individuals with huge capital, they prefer option selling than option buying. Even though the risk is high, the reward is fixed, that means it is limited, and capital requirement for option selling is high compared to option buying, but still big institution prefer option selling over option buying. Now in this final section of the video, that is what we will understand. Now traders, let's take Nifty as an example and understand why big financial institution, high net worth individual prefer option selling than option buying. Okay, now let us assume Nifty's current price is 18,000. Now this green line which I have drawn here, this is Nifty's 18,000 level. That's what I have marked. Now let's say I am an option buyer and you are an option seller, and both of our view is bullish about Nifty. I think Nifty will go above 18,000, and even you are thinking Nifty will go above 18,000 and it will close by the time of expiry. Now since I am an option buyer, I have to buy a call option of Nifty because my view is bullish, right? Now even your view is bullish, but you are an option seller, so you have to sell a put option of Nifty. Now let's say both of us entered the trade at 18,000 strike price, okay, at this level. Now at what and all situation an option buyer will make money? An option buyer will make profit only when his view is correct. So from this 18,000, if Nifty goes high like this, an option buyer will keep making profit quickly. Now without taking more time, as soon as I enter the trade, if Nifty rapidly goes towards the upside, I can make very huge profits. Okay. Now instead of this rapid momentum like this, let's say the Nifty movement is small like this. It's staying in a range for a longer duration and then it's going up. At that time, the premium of option buyer, I paid some amount and bought this call option, right? Its premium will keep reducing. This happens because of there is something called time value in options. An option buyer always makes profit when there is a very good momentum in one side. Here also I'll be in profit, but the amount of profit what I'll be doing will be comparatively less because the market is trading within a range for a longer duration. Now if Nifty exactly moves like this and closes at this level itself, an option buyer will be in loss, and if it rapidly goes down, even though the loss is limited for an option buyer, for Nifty sometime back I said it costed 7,000. No, if there is a rapid momentum like this, we'll lose that premium amount which he paid. But for an option seller, the situation is different. Now you are an option seller and even your view is bullish, but please remember, for option seller, the profit is fixed. Now let's say you sold a put option at 18,000 strike price at 130 rupees. Okay. Now if Nifty rapidly goes here, you will get that entire 130 rupees. You will not get more than that. Now instead of a rapid momentum, if Nifty movement is like this also, you will get this entire 130 rupees. Now third situation, if Nifty goes like this and it closes little below 18,000, still a put option seller will be in profit, but there are chances that he will not get that entire 130 rupees, but he will get somewhere around 100 rupees or 90 rupees. Still in profit he will be. But an option seller will lose money only when there is a rapid momentum towards the downside. Okay. Now just have a close look at this. An option buyer is able to make profit only when there is a rapid momentum. He'll just make minimum profit when there is a small momentum, and if market stays sideways or it goes down, an option buyer will lose money. So overall, an option buyer will stay in profit only when he captures the very good momentum of the market. If market goes sideways, he'll start losing money. An option buyer has to always have the correct view of the market to make more profit. But for an option seller, even though his profit is fixed, see at this situation, he'll be in profit. Even at this situation, he'll be in profit, and this third situation he will be in profit. Only when there is huge momentum like this, only then an option seller will be in loss. Since the probability of making profit in option selling is more compared to option buying, a lot of big institution and high net worth individuals, they prefer option selling over option buying. Nifty and Bank Nifty, how many times will it be trending in a month? It will be trending for 6 to 7 days, right? But most of the time the market will be sideways. An option seller will take advantage of the sideways market and they will wait for the premium amount to become zero. That is an option seller's main goal, because he sold it at a higher price. If the value becomes zero, he need not pay anything. But an option buyer, he mostly rely on intrinsic value. Now does this mean an option buyer cannot make money at all? That is not true. An option buyer can make huge profits when he is able to identify the movement of the market. I personally use price action to understand the market momentum. Price action is the most powerful tool which helps us to identify quick trading opportunities in the market. Now, if you are interested to learn what is price action, how you can make the best use of price action and find high quality trade setup, then I highly recommend you to check out our course. The link of that course is left in the description box below. Now traders, what we have discussed now is just some basic concepts related to option. I have tried my best to explain this to you as simple as possible. Now if you check out our YouTube channel, in that I have a playlist of 5 to 6 videos specifically for futures and options. I highly recommend you watch that as soon as you complete this video. Alright? Now traders, it takes a lot of time for us to make such videos for you. Now if you enjoyed this content, please like and subscribe to this channel. If you think this video will be useful for your friends, please share it with them and don't forget to press the bell icon. Now that's all for this video. I will see you in the next one.